What if you invest $10,000 in the best 3 Vanguard index funds? Say you just got your hands on $10,000. Your first thoughts could be splurging on a luxury vacation, upgrading your car, or buying the latest gadgets. But what if I told you that same $10,000 could grow to $3.1 million without you lifting a finger? By investing in VOOG, VGT, and VOOG, you can set yourself up for a stress-free retirement and generational wealth. Today, we're breaking down the 3 best Vanguard index funds that can help you invest just once and let your money grow on autopilot, all while riding the unstoppable growth of the U.S. economy. We didn't just pick them because they're popular. We will be diving deep into the strategy behind each one so you can be sure to maximize your returns. From good to the best, by the end, you'll see how a simple $10,000 investment could grow into over $3.1 million. When it comes to investing, few names carry as much weight as Vanguard. Founded by John Bogle, the pioneer of index investing, Vanguard has built a reputation for putting investors first. Unlike many other firms that chase profits through high fees and active management, Vanguard is structured to benefit its shareholders. That means lower costs, more transparency, and funds that are designed to build wealth over the long run. It's no surprise that some of the world's most successful investors, Warren Buffett included, recommend Vanguard's index funds as a go-to choice for growing wealth. Now, you might be wondering, why index funds? Why not go for actively managed funds that claim to beat the market? The reality is, most actively managed funds don't beat the market consistently, and even the few that do are nearly impossible to pick in advance. On top of that, they come with higher fees, which eat into your returns over time. Index ETFs, on the other hand, let you invest passively, meaning you don't have to worry about picking stocks, timing the market, or reacting to short-term noise. You simply buy, hold, and let the market do the heavy lifting. It's the ultimate hands-off strategy, and history has shown that it works. Now that you know, let's run through 3 of the best options. First up, VOOG, also known as the Vanguard S&P 500 Growth ETF. This fund is all about capturing the essence of large-cap growth companies in the U.S. Essentially, it mirrors the S&P 500 Growth Index, thereby giving investors exposure to some of the most dynamic and rapidly expanding firms in the market. One of VOOG's standout features is its impressively low expense ratio of just 0.08%. This means that for every $1,000 you invest, only 80 cents go toward management fees annually. In the investment world, keeping costs low is crucial, as it allows for more of your money to stay invested and compound over time. Now let's talk about what's under the hood. This tech focus includes giants like Apple, Microsoft, and Nvidia, which are its top 3 positions. It means that VOOG's portfolio is heavily weighted toward the technology sector, which makes up about 41.65% of its holdings. Beyond tech, the fund also has significant allocations in consumer cyclical stocks at 15.56% and healthcare at 11.80%. This provides a balanced exposure to various growth-oriented industries. VOOG focuses on growth stocks within the S&P 500. As of the latest data, it offers a dividend yield of approximately 0.48%, with an annual dividend growth of 3.5%. Over the past year, VOOG has also delivered a price return of about 17.2%, reflecting its strong performance in the growth sector. Now let's see what happens when you invest $10,000 into VOOG today. In 5 years, things start looking up. Your portfolio could grow to $22,600, with your dividends now paying around $100 annually. Still not a fortune, but remember, the portfolio keeps growing. Now let's jump ahead 20 years. Here's where the power of compounding kicks in. Your initial $10,000 investment could balloon to a whopping $260,000, and your yearly dividend income could hit $1,100. That's money coming in without you doing a thing. And after 30 years, this is where things get truly exciting. Your portfolio could be worth $1.3 million. That's over $1 million from a simple one-time investment. And the dividends? Now you'd be pulling in $5,400 annually, about $450 per month. That's enough to cover bills, reinvest for even more growth, or simply enjoy financial freedom. VOOG is a powerhouse. But what if I told you there's another Vanguard ETF that could take your portfolio even further? VOOG. The Vanguard Growth ETF, known by its ticker symbol VOOG, is a fund designed to give investors exposure to a broad spectrum of large-cap growth companies in the U.S. Essentially, it tracks the performance of the CRSP U.S. Large Cap Growth Index. This strategy aims to capture the potential of companies that are expected to grow at an above-average rate compared to the market. One of the appealing aspects of VOOG is its low expense ratio, which stands at 0.04%. Remember, when it comes to expense ratio, lower is always better. When you look at VOOG's top holdings, they include tech giants like Apple, Microsoft, and Nvidia. This means the fund leans heavily toward the technology sector, making up about 41.86% of its holdings, similar to VOOG. However, it goes beyond just tech. With a stronger focus on communication services, 13.46%, and broader exposure to other sectors. This added diversification gives investors a well-rounded mix of high-growth industries while still capitalizing on the tech-driven market. Essentially, VOOG offers investors a cost-effective way to invest in a wide array of large-cap growth U.S. companies with a strong emphasis on the technology sector. VOOG provides exposure to a broad range of large-cap growth companies. It has a dividend yield of around 0.46%, with dividend growth of 6.14%. It has achieved a price return of approximately 18.2%, underscoring its robust performance in the growth segment. Now let's move on to the projection. If you invest $10,000 into VOOG, all you need to do is let time work its magic. In 5 years, your portfolio could grow to $23,500, with your dividend income increasing to around $100 per year. Not bad for a completely hands-off investment. Now let's look at the 20-year mark, where compounding really starts to do the heavy lifting. Your initial investment could skyrocket to $306,000, and your annual dividend income could hit $1,200. At this point, you're generating cash flow without having to lift a finger, and your wealth keeps growing. But the real magic happens after 30 years. Your portfolio could skyrocket to an incredible $1.7 million from just a $10,000 investment. Annual dividend income will increase to $6,500. At this stage, the power of compounding has done the heavy lifting, turning a small initial amount into life-changing wealth. This kind of growth isn't just about numbers, it's about achieving true financial independence and having the freedom to live life on your terms. Want to know the best part? We still have another ETF to cover that could push your portfolio even further, and that is VGT. The Vanguard Information Technology ETF, or VGT for short, is a fund that is laser-focused on the tech sector. For its strategy, it aims to mirror the performance of the MSCI US Investable Market Information Technology 2550 Index. In simple terms, VGT offers investors a slice of the entire US tech landscape, from established giants to innovative newcomers. One of VGT's standout features is its low expense ratio of 0.10%. Keeping costs this low allows for more of your money to stay invested and creates room for harnessing the growth potential of the tech industry. Diving into its holdings, VGT is heavily weighted toward industry leaders. Apple Inc. makes up about 17.62% of the fund, followed by Microsoft Corporation at 15.67% and Nvidia Corporation at 14.25%. These top three holdings alone constitute nearly half of the fund's total assets. Overall, the technology sector dominates the portfolio, accounting for approximately 90.58% of its investments. VGT is dedicated to the information technology sector. It offers a dividend yield of about 0.60%. The fund has demonstrated significant dividend growth at 18.95%. Over the past year, VGT has delivered a price return of approximately 20.5%. highlighting its strong performance in the tech industry. Let's put these facts to the test, shall we? When you invest $10,000 into VGT and just let it grow, by the 5-year mark, your investment could grow to $26,000, with dividend income reaching $130 per year. It's slow but steady growth, and here's where things start to snowball. Fast forward to 20 years, and your initial $10,000 could explode to $460,000. That's nearly $500,000, and now your dividends start making a real impact. You'd be earning $2,300 per year, enough to cover some major expenses or reinvest for even more growth. Now, the real magic happens after 30 years. Your $10,000 investment could grow into an astonishing $3.1 million. And the dividends? You'd be pulling in $16,000 per year. That's the power of long-term growth and compounding at work, turning a modest amount into true generational wealth. With a portfolio of this size, you're not just securing your retirement, you're creating financial freedom that can last for decades passively. You've seen the numbers, the growth potential, and the power of compounding. A simple $10,000 investment in these Vanguard ETFs could turn into hundreds of thousands or even millions over time. The best part, you don't need to time the market or pick individual stocks. Just invest, stay patient, and let these ETFs do the heavy lifting. Ready to kickstart your investment journey? Do share your thoughts in the comments. Like, share, and subscribe to the channel if you haven't already, and hit the notification bell so you don't miss out on future tips.